please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Japanese index, however, recovered about 0.25% from the low point of the day. The Korean markets, they're trading higher.
We are going to continue the journey as far as the new launches are concerned. We have a rich pipeline of new products.
After maybe, a bit of knee-jerk volatility in the first half, today you could have a short covering rally in the second half.
I would not expect any global stocks to be left unscathed in a global trade war.
It's about 35 down on the Nifty and about 60 down on the Sensex.
If we continue alliance, public will not accept. So probably two methods will be there. The breakup may be step by step may be there, or total breakup may be there.
They've revised the 2017-18 sugar production number to around 29.5 million tons. Now, that's not good news.
No relief as far as markets are concerned. 68 points lower on the Nifty, 10,180 is where we stand.
Okay, and we are precariously close to the 200-day moving average on the Nifty, just about 60 points from there, actually 50 points now with this last bit of decline. And all pullbacks, rally would be a strong word, even pullbacks are being sold into. This is Closing Bell. I'm Anuj with me, Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. What do I say? It just feels like yesterday to me, Same set of stocks, same problem with the HDFC twins. Again, more selling in Reliance. And as you're saying, extremely weak. Is there any silver lining? What do you make of the market's texture now?
A bit of Murphy's Law here. Everything that can go wrong is going wrong. And even that, FI buying that you saw yesterday, perhaps some part of that was because of that HDFC QIP money getting reflected. There's selling. Obviously, every time the market is recovering, there's large bit of selling from FIIs. And as you saw yesterday as well, I think even the domestic investors have now pulled back a bit, saying that, look, right now there's no point. This is a bit of a falling knife here. This whole TDP issue, I think, also hurt sentiment in the middle because, while you got some bit of traction from BJP's Northeast win, Andhra is a big state. Right now, it looks like only posturing. And I don't think, it's, TDP is going to walk out of NDA, anything like that. That should not happen, Surabhi, but, that was a bit of an irritant for the market. And, that this whole derating of banks is still continuing. The bank Nifty is down about 1.1%. So that weighted change, IT is doing well today. I think IT index till now, I haven't checked it the last time, but, some time back, it was still trying to hold in the green. Even though by a smidge. So that trade is still on, weight being taken off banks and, moving to IT. But that doesn't count for much right now in the market. So as of now, let's see. We are close to 200-day moving average. Normally, you defend 200-day moving average, but this is looking a bit precarious.
Yeah, absolutely. And you know what, Anuj, I was waiting for this AMFI, monthly data, the mutual fund data that comes out. And surprisingly, it's not come out. It always comes out between 11:30, 12 during market hours. And we've gotten used to seeing such great numbers. Offline, I was hearing from some people that February has been bad. January, you could blame it on ahead of budget, LTCG, some, a little bit of redemptions. This market was getting cautious and very overheated levels. What I heard offline, yet to see the numbers, is that redemption pressure has only increased in February. Yeah. So that DII support, is also sort of...
Yes, but also keep in mind, February had 28 days. Also, there were a couple of working days. There were holidays as well. So let's not exaggerate. But yes, I take your point. That would happen. But, the problem is not redemptions. I think the problem is whether, mutual fund managers themselves are thinking that right now it's better to stay on cash instead of, even if they have excess cash, instead of putting money, because, putting money right now, you're only providing exit opportunity to the FIS.
Getting out. Absolutely. Okay, on that note, let's get you the headlines on Closing Bell this afternoon. Global weakness hits Dalal Street as the market sees volatile trade. Key indices down about 0.5% each. Mid-caps take a bigger knock, with that index down over 1%. Asian and European markets lower as traders fear as trade fears return after White House Chief Economic Advisor Gary Cohn's resignation. The banking space reels under pressure yet again, with the Nifty PSU Bank down over 3%. The Nifty Bank is down about 1%. Credit Suisse report says that large treasury losses of up to 20,000 crore rupees are expected in the fourth quarter. The Telugu Desam party looks at the option of withdrawing from the NDA after they remain unconvinced by the government's assurance on a special status for Andhra Pradesh. Sources tell CNBC TV 18 that Chandrababu Naidu will convene a meeting on the alliance in Amravati.
Okay, how should you position yourself in this last hour of trade? Then Ashwini and Mitesh join us. Once again, there's minor bit of recovery from the low point which we are seeing right now. Will be interesting to see what happens in last hour. Good afternoon, Ashwini. It's getting a bit brutal, right? The sell-off, especially on the banks. The Nifty is still relatively okay because of IT. But your thoughts on how to approach it from here and your last hour calls?
Well, the market is getting easier to trade, because the pressure on the downside is so large that even a 15-point recovery gets sold in two. The problem is that mutual fund managers don't know how to trade. They like a 30% up market. That doesn't happen every year. Simple view, you get your 15-point rally, sell. Why? Because the 200-day moving average, the market does not know that the average is there. What you have to assess is the kind of support that is coming in. And the kind of support that is coming is not very inspiring. So my sense is that this is going to get taken out fairly soon. I would have expected in a normal orderly market, 10,000, 270 to come back. The previous low gets tested once. But we are hardly able to, stay above 10,200. So make no mistake, we'll go below the 200-day moving average and way below. Because if support was so apparent, we won't be hanging around chopping even when the market has had many days of fall. So that being said, I think still carrying short positions is the way to go. Canfin Home is a sell with a stop of 508, target of 480. Escorts is a sell with a stop of 845, target of 820. And Zensar Tech is a buy with a stop of 878, target of 910. We tried long positions today. What happens is that the market's rallies are very labored. And with one bar, the entire 8-bar rally gets taken out intraday. That just means that somebody sitting out there, each time he sees green, he comes in with a big order to sell. If that doesn't change, then no average will hold.
Yeah, punishment on Canfin and Canara Bank in particular today has been quite brutal actually. Ashwini, Canfin, you said to sell for last hour, but is it a positional sell as well?
See, all these guys went up a lot. I mean, Canfin Home is post-split at 490, but I think it will be 4 digits if you look at pre-split. So today's bar probably makes sure that you will probably test 420, 430 recent lows at least. The problem is that we hit 200 and we've come off strongly. Once the 200 starts to provide resistance on the upside, then basically the trend has turned decisively down.
Down would probably be the one word that describes pretty much every index you're seeing out there today. Mitesh also with us as always. Good afternoon, Mitesh. What have you made of today's weakness and, of course, ideas for the last hour?
Yeah, good afternoon. So I think, today weakness was quite expected given the fact that yesterday was a break below the levels of 10,300, 320, and I talked about targets close to about 10,130, which is where the 200 average is placed. So I think, around these levels, you might see a temporary arrest of a decline, while today it's not been visible. My sense is that as long as you don't break 10,130, it might be prudent to slightly push your stop losses on the short positions to the to a narrower level. So I think we are still trading on the short side primarily because stocks are still breaking down, the intraday charts are still negative, but now I think the only change we have done is that we have taken slightly tighter stop losses. So I have 2 sell calls on the stock side. Adani Ports is a sell with a stop at 400. It's come down a bit, but I think try to sell it around 393, 394 with a stop at 400 for targets of 380. And Pidilite is a sell with a stop at 885 and a target of 855 is what I would look for.
Fair enough. SP Tulsian of sptulsian.com is with us now. Ms. Tulsian, good afternoon. The stock I want to discuss first is Karnataka Bank, because till now, we had this big problem with the PSU banks. Today, the biggest loser at one point actually was Karnataka Bank. Your thoughts on this stock?
I think this problem has started spreading since yesterday, because we have seen that happening with ICICI Bank and Axis Bank and SFIO, because 32 banks are involved with the episode of Gitanjali James and Nirav Modi. But the problem is that you just have 23, 24 or 25 PSU banks, and rest are all seem to be the private sector bank. You are not expecting them to be HDFC Bank or maybe IndusInd Bank kind of things. So obviously the people are those who have the knowledge, or those who have been seen worried. They are definitely seen moving out of these investments. And as such, if you really see the kind of investments there was a unanimous call that private sector banks are the only investments where we must remain invested. And in fact, the index constitution, probably I may sound little bizarre at this moment to talk on this, that the Nifty constitution was seen more tilting in favor of the financials, which in fact is not correct. In fact, I expressed my views earlier also on the Nifty constitution, which we will be seeing maybe with the start of the April series also, where you see the holding and subsidiary companies falling in the Nifty. How can that happen? You will be having Bajaj Finserv and Bajaj Finance coming in this in the Nifty 50 from first week from April series. Similar is the case with Ultratech and Grasim. You will be seen having them coming in the Nifty 50, the same, both holding and subsidiary company. You have already seen Bharti Airtel and Bharti Infratel existing in that space. So my point is that if you make the rejig, obviously many of the funds, many of the investors, they do follow index, but apart from that, the unanimous call, I'm not saying that you should have been invested in the PSU banks as well, but the unanimous call, or maybe the heavy investments in favor of the private sector banks, are also now giving a kind of shiver in the spine, that if we get to hear these kind of things, in exposure to maybe Gitanjali James, if not to Nirav Modi, then probably that will be seen as a big negative, because in the falling market you are scared with every negative news, and that is what is seen happening in Karnataka Bank also. And I won't be surprising to see the things getting spread to other private sector banks also, as and when the news flows comes in.
Okay, fair enough. We also have Dilip Bhatt with us in the conversation. Dilip, now when we're talking about fear psychosis, or the market having a problem with certain types of stocks, the Adani Group stocks have seen a severe beating last couple of sessions. In fact, I'm just looking at the rates. All of them are down today as well, and the likes of, let's say, Adani Transmission, Adani Power down 10%. Would you look at buying anything at all, or is the advice to stay away from this group now?
Well, I think these are the times, as what you very rightly use the word fear psychosis, or maybe, it's bordering on panic. So anybody even remotely connected and where the debt leverage is pretty high, I think those banks, those companies and the groups will immediately qualify in that apprehensive list of investors trying to stay away or trying to hammer it down. So I think this is typically one of those phases of the market which possibly we'll have to go through, because none of us have any idea how large this thing can become before it really fades out. So I think that fear is typical of, typically which is what happens in the market. Having said that, I think I would still prefer, I think there's so many other stocks, so many other groups. So nothing against Adani. I think they are doing it in the very normal way. They are growing, and some of the companies, especially the power companies, Adani Port, I think they are all doing exceedingly well. But still, I would prefer to look at something else on a stock-specific basis.
Okay, the market is taking out the overcrowded trade, and by how? Just take a look at the charts of Canfin Homes, India Bulls, Housing Finance. So Housing Finance was one area, DHFL for the last few days. That's where, a lot of positions are being taken off at this point in time. Even IDBI Bank, of course, from the high point is down quite a bit. But the move on India Bulls Housing in particular, that, of course, from the index was the big mover. And, a couple of these stocks are really seeing the lows of the day being made right now. Dilip, good afternoon. The market is seeking some kind of defensive buying in IT, especially the mid-cap IT. Do you think that's a good strategy?
Anuj, you're right. I think this is what really happens. We have seen that whenever the markets come off in a big way, I think there is a flight to stocks which are resilient to the fall, and IT probably qualifies as one of them. Surprisingly, I have still not seen any great buying happening in pharma sector, despite some of the stocks hitting new lows. But I think, yes, it's very much there. But I think within the IT space, some of these mid-cap names really stand out. I think particularly we are looking at Persistence Systems. I think that looks pretty good. I think the mid-cap names looks pretty solid and pretty confidence-inspiring one. I think Mindtree is another one that really looks good. Sonata Software is another one. So I think within the IT space, I think the mid-caps look a lot more safer because they are ready to show a good growth over the next couple of years.
Mr. Tulsian, sir, a word on ICICI Bank. It's down 3% now. And, you know, it's only been, what, 4 trading sessions in the month of March, and it's already lost 8-9%.
See, if I just repeat the same thing that probably the fear of SFIO and, the exposure to Gitanjali Gems, that may not be correct. But I think that this has been realized by the fund managers and maybe the wealth managers that you cannot remain invested heavily in the private sector banks also, always taking them as a safe haven. And coming specifically on ICICI Bank, the fear of, because it is a known fact that yes, they have the exposure to Gitanjali Gems and they may have discounted some of the LUC having issued by the PNB to Nirav Modi. So all these fears are seen, people exiting from the private sector banks, and maybe the stake or exposure to that sector is getting reduced with a shift, happening in some other sectors. But at this stage, I can only say that the fear of the exposure to NP and maybe some serious actions or regulatory actions likely to get initiated against these banks are making the stocks ruling quite weak and dull. Yeah.
Okay, so again, it's one of those days where there's more pain in the mid-cap market. Anuj, I'm looking at the kind of stocks that are falling. So a lot of the indebted groups we spoke about, sort of one. Then, of course, a lot of the cases which are lined up for resolution. The JP twins are down quite a bit. Stocks like Fortis, where there's a fundamental issue. So is there a sense that this perhaps for the mid-cap market, this pain is going to continue?
That will happen. But right now, the mid-cap is not even an issue here. The large cap, the market had one bit of support from Reliance.
True.
I think the market's back has been broken over the last 3 or 4 days, but the way Reliance has fallen, and just take a look at the chart right now of Reliance, and in fact, Surabhi, this week it's down 6%, and it was just third day of the week, and right now, ICICI, SBI and Reliance, these are the 3 stocks with highest volume, highest turnover, and will be interesting to see the delivery volume, once again in some of these names. So first you had the Bank Nifty, where clearly the back was broken of the Bank Nifty, way below the 200-day moving average. Now I think some of the other index heavyweights like Reliance, on certain days even Larsen and Toubro, they are beginning to fall. The only safe haven which is left is IT. And perhaps the market bottoming out process would start once even IT starts. So we spoke about Maruti as well. That was also one of the market leaders. Maruti, that started to fall by the wayside. So perhaps maybe the last remaining bastion, if you start to see some kind of selling in IT as well, perhaps that would put a bit of a flow for the market. We are now approaching perhaps the last of the carnage of the market. I mean, I could be wrong. But, I still think it's a bull market correction, and at some point, of course, you will bottom out, maybe sub 10,000, around 1,900, thereabout. But these large stocks, the way selling is continuing, obviously, this market for the near term is seeking lower levels.
Absolutely. In fact, Ashwini, if we could just get levels from you on RIL sub 900 now, is there a fresh trade on Reliance? And, what is the next support zone that could be in sight for this one?
See, RIL is, sideways. And basically, on the downside, you can say that around 860, 870 thereabouts is the support for Reliance. But in this sort of a situation, I think Reliance 860 will also go. See, my sense is that there is some fund flow situation which has changed. And one issue is LTCG. And since that day, there is no support in the market, because even if people are selling at 10,200, then who is bullish on this market? So let's not make this mistake of thinking that this is a mild correction. It's only accentuating as it goes lower. So possibly somewhere, the investment thesis has changed because of this taxation.
Fair enough. We'll take a break on that note. Up next, the global weakness persists, but for our market, we have our own problem. There's been quite a bit of selling, and today in Newsmaker, we have Tahir Basha of Invesco Mutual Fund, who will be joining us in a bit.
Welcome back. So continues to be in dire straits, this market. Some more news on Sun Pharma coming in on their Pontasai facility. It's a good manufacturing certificate, but from the Dutch regulator. Of course, there are other bigger issues that Sun Pharma is still grappling with. Mr. Tulsian, since we're on the subject and we're looking at the stock now, what's the takeaway? I mean, given those three observations on Halol, is there any point in buying Sun Pharma now?
No, I don't think so. And this is what I've been saying for maybe 4 or 5 days since we have got the news that Halol facility got the three observations, because you do not know. I agree that, maybe that the observations are not seen to be of the serious nature, but you do not know the timeline. And when you have these kind of uncertainty, and pharma sector has not seen having come back on the focus, in the sector rotation buying also. So in both the cases, I don't think that it is worth taking a call on Sun Pharma until we have the clarity on the Halol facility.
Okay, fair point. And I think the market has bigger, issues at the mind. And look at the individual stocks now. Canfin is now approaching almost a 10% fall. Adani Power is down 7%. Fortis is down about 8%. In fact, Fortis has made a fresh move towards the low point. Even stronger stocks like Bharat Forge down quite a bit. Mr. Tulsian, again, before we thank you, 2 or 3 stocks that you think have now come at a level where you should be buying, regardless of where the market goes from here now?
See, in fact, you get many ideas, because I don't think that maybe take the case of the market now. I don't know, because we have been saying that probably I'm not trying to justify my view that I said so, but up to 13th March, that was the call that always ahead of the advanced text, we see this kind of selling coming in. Take the call on the global market, which has been, having its effect on our markets also. They cannot continue to behave like this. Come on the Indian market at 10,200. You have umpteen number of frontline stocks available now, at a very good valuations. I don't think that one can really deny on those valuations. And in that situation, maybe technical factors will start playing in, whether that comes in the middle of March or whether end of March. Difficult to say, but definitely those things will come, because fundamentals seen having more than larger the negatives having factored into the valuation. Now it is only the technical factors which are playing in, and definitely the market is heading in the oversold position, and we are bound to see the short covering coming in. At that time again, we will all be seeing the markets to start moving up, and then the buying will start coming in. So maybe in that background, if I want to venture out as a brave investor, just as an example, I may probably won't hesitate in buying Canfin Home also, because we know that RBL Bank has been in the front running in this one. Maybe one P investor has seemed to have Evin's interest. They are all having the meeting. I don't think that there is any kind of problems in terms of the valuations. And it is certain that Canara Bank, the promoter of the company holding 30% stake, are going to monetize. So they will be definitely taking a call on monetization of this. Take the second stock, maybe like Godrej Industries, a holding company for Godrej Agrovet, holding company for Godrej Property, having investments of about 23-24% in Godrej Consumer Products, and all these stocks are doing quite well, more especially the Godrej Consumer and Godrej Agrovet. So again, it's a matter of time if Godrej Agrovet and consumers have risen so much, why Godrej Industries will remain behind. So in fact, I would say that it is a time to take a call on the frontline stocks, and I don't see any reason why there won't be any recovery. Whether that happens in a week or a fortnight, it's just a matter of time.
Okay, all right, Mr. Tulsian, good talking to you as always. Thanks very much for your time today. The market continues to struggle around the lows of the day. Let's pull up one individual stock, Radico Khaitan, which is struggling along with most of the other parts of the market, pretty much at the day's low. And let's also get a one-year chart on Radico Khaitan. Now, that's today's performance. It's already lost some 14%, 15%, I think, in this month. 1 year will tell us the story because it was one of the darlings, the stars of 2017. Dilip, on a stock like USL and Radico, should this dip be bought? Or do you think the best is now behind these two?
Well, I think purely from a fundamental perspective, I think certainly both the stocks offer reasonably good opportunity because the fundamentals for these companies have not changed. And I think going forward, we are only going to see good visibility in terms of the volume growth. So particularly United Spirits is something which I think it should be on the radar and it should be bought at the fall. Because this is the time when you are really going to get some of these stocks at a price which you want for a long term, of course, not a short term notwithstanding. I think it's going to be a little part of this volatility. But I think, yes, on a longer term basis, both the stocks and more so USL looks pretty interesting.
Okay, USL looks pretty interesting as per Dilip. Anything else, Dilip? If we were to give you a blank check kind of question, we asked the same to Mr. Tulsian as well. Anything that you would want to buy?
So I would completely agree with Tulsian that we should focus when these kind of falls happen. From 11,000 the Nifty is down to 10,200 almost. And I think you must stick to some of the front line because they have fallen. I think within that pack, I would say that something like Piramal Enterprise looks good, Yes Bank looks good, Bajaj Auto looks pretty good and interesting. I would say even something like even the mid-cap IT which I just spoke about, I think they look pretty interesting. I would stick to some of these names.
All right, Dilip. Thanks a lot for your time today. Tahir Basha of Invesco Mutual Fund is with us now in our Newsmakers segment. Tahir, good afternoon. What a difference, the change of calendar year has made. Last year, we were asking fund managers, how are you using all that money that you're getting every month? This year, all of a sudden, things are looking completely different. So, the obvious question, first of all, are you seeing redemption pressure? Is that a bit of a worry? No, I don't think Tahir is able to hear me. So let's do one thing. We will take a break and be back and sort that issue with Tahir and also get you the BTST call from our technical experts.